Good morning, everyone. Thank you for being here. People at home, you're watching this. There's going to be 3 videos alphabetically ordered with about 145 tickers. I will have another video most likely tonight on Sunday night. Today is February 2nd. And the video tonight will be the 5-minute indices plan. So I won't cover the indices here. I do all week. So I'll have the plan tonight with the big picture, and then all week before the market open, we will have a plan for that particular day. I'm also traveling next week, so later in the week I will be scarce. But Friday was epic. You're looking at the S&P, it looks like a disaster. We fell off a cliff only to hit the base from 2 days prior. So anybody that feels like, oh my gosh, I got caught long, you're too long. This is just Wednesday's base. So, but in the process, the big picture is that the indices gave up levels and got back into all the progress they did. They just gave it up. Not the end of the world. It's just a setback. Only the Dow is still a superstar. And I don't look at it because any one of many stocks can control it completely. It's not even an index anymore. They should just discontinue that bad boy. So we will do the tickers here for the companies you've been researching. We'll start with Apple. Apple has done a lot of work as far as charts are concerned. And it's had its moment with the earnings. The earnings were boring, as expected. Not a lot of growth. So lagging in that compared to, say, NVIDIA and company, even Microsoft. Technically, it's not a bad situation. You can see how it slid for weeks, and then it was a superstar when markets were struggling. It did provide a lot of lift for the indices. It is in all of them. So from this perspective, we went from point A at 260, which was way too high, to point B at 220, which is okay, to bouncing halfway and giving back halfway of that halfway. There's no action point here. If I wanted to sell credit put spreads and credit call spreads to make money, that's fine. If I'm buying it here because I'm investing for the super long term, it's fine as long as I don't do all in. So I don't have a lot of input for you if you're investing. There's nothing much to do here. We know what it is and what it isn't. Support zone below. If we lose 218, we will open a trap door for another anywhere from $5 to $15. So it will have another leg lower like this one. It may be gentle of selling rallies. We do have a few mega caps coming up for earnings this week. So this one may again get influenced by, say, the reaction to Amazon or Alphabet. We will see. Up or down, we don't know. So that's Apple. Investing, still boring. Trading, you have a base of buyers below. Anything below 230, it looks like it's been stepped up to buy. Anything above 248 is a problem, but if they take out 248, they might overshoot. I would short it if it does. It's boring. Tim Cook needs to go. ABBV, so this is where I'm totally confused. Have they or have they not? I don't listen to news, especially not politics. Confirmed Kennedy. If they have, then this is that sector is done falling. So I don't know if you remember, this sector fell incredibly hard because of the fear of what he might do to the industry of food and drugs if he gets appointed. I'm not sure if he did. Technically, this is not an entry point. Look left, that's where it got disastrously beaten down. So anything above 192 for me is a blessing. If I'm long, I would have been out. Now we have buyers below 178, but you don't want to lose 164. You lose 164, you're going to 154, maybe even 145, 6, something like that. There's nothing to do. If I own shares, I would be selling covered calls aggressively. So here are the lines that I put before. Way back in the day, in July, I said support and resistance, and they busted out, and look where they fell into the letter S. That is still there. So that is the letter S here. It's still here. That's one. This circle is now kind of small support. This rectangle is, it's playing the role. So maybe we're stuck between these two rectangles until they broke out. And now we're stuck under this. What's it going to take out all of these buyers? I don't think it can. Anyway, it would not be a starting point for me. As far as support short term, 179. Adobe. So I suggested you close that trade. It was slightly green this week at one point. If you're interested, I suggested a credit put spread. It came under fire, but now it's not. It is statistically viable. Last time I looked at it, I closed mine. I sent out notes. 1 second. Okay. Adobe, I closed mine. There is a risk of retesting the low 420s, especially if the market's going to have a hiccup. If we're back to he said, she said, see what I did there? He said, that would be Trump. She said, that would be China's president. On tariffs, this and tariffs that. Now Canada's getting into it, I hear. Mexico will probably get into it. It's a party. Anyway, I don't want to have iffy trades. This is a good company, solid support around 426, better support around 414 or lower. You better not lose 400. If you do, I don't know how low they go, but they can go a lot lower. This company is not cheap. P&L is solid. Business is solid. It's not cheap. Never cheap. ADM. Earnings in 2 days. Whatever I tell you now, it's useless. So join me the day of the earnings, and we will talk about the options to see if there are any clues in there. Technically, anything above 53 should be difficult. Anything above 55 would be an exit point. And support at 49, actually support at 50 and lower. And if you lose 48.50, you might go to 46.50. Sellers above 53, buyers below 48.50. That's the way it works. Gold has had a run of late. I believe it hit an all-time high or close to it, so it's only appropriate that this one is. I'm not sure what you're asking me. This here is not an obvious entry point. If now you're interested for it to the upside, means you think you're a momentum trader, really ask yourself, are you or not? Do you trade often and fast? Have you traded the same stock twice in one day? If not, then this is not for you. I don't know how to buy high and sell higher if I'm not a really active trader. This is a stock. Let's say the stock market corrects and gold spikes. This will fall with the stock market. This is not gold. It's a company that just happens to depend on gold's price action. This is definitely not for me. If you ask me now, I would even short it. I would buy an in-the-money put. Not with conviction, but if you force me to do something, I would short it. Let me see, did I have earnings? Yeah, 11 days earnings. AMD, earnings in 2 days. Coin flip, I don't know what they're going to do to retaliate against NVIDIA. I think they're toast, to be honest. I will trade it. I will give you clues the day of. We will look at the options. But from an investment perspective, if I'm an investor in AMD already, I am not adding any here. I'm already in it. And there is a base below. That support zone is still there. If you look left, it's well consolidated. So I don't know what it will take to have it lose 100, but if it does, it can go to the low 80s. That's not my forecast. I'm just letting you know. Headlines are headlines, good or bad, they're going to react. We've seen the market react incredibly stupid this week, right? I forgot what company. The sales got cut in half almost. They lost 40% of their sales and the stock soared. Microsoft grew sales, solid, everything, and it fell as a reaction. So these guys don't know what they're doing. The reaction to the earnings is just pure emotions and expectations. So short term, if I get a bounce to 138, I'm out. If I'm a trader, there are sellers from 130 on up. So it's not a bad place to start a long, provided you're okay with a coin flip outcome short term, and provided you leave room to more than double your order. If I'm already long, I'm not doing anything. Amazon, same story. You guys are asking me about tickers that are reporting earnings. And this one, it's at all-time highs. What do you want me to say? I mean, if you're asking me about it, it means you're itching to get long or itching to get short. Either way, I think you're gambling. It's going into earnings, and we don't know how they're going to react to it. So I'm not a guessing man, but I do read the options chain pretty well. We did okay on this earnings season, except for Netflix. So come join me the day before they report. I will have a lot to say about it. It's an okay company. It was my favorite, not anymore. They have their finger in so many things, and it's a beast. Buy the dip, yes. At least inside these. Look how, okay. Fine. Watch this. Look how uncommitted the bulls are in one day. 6%, almost 7% in one day. That's how uncommitted they are to it. What does that mean? They're long and they're super profitable. A couple of red ticks and they'll ditch everything at one time. The opposite of a short squeeze. It works the other way. That's why whenever a stock goes ballistic like this, inside of a market that is ballistic on deteriorating conditions, you put a spark, they'll sell everything so fast you won't even have time to get out. What am I saying? If I'm long, I'm selling cover calls if I have enough shares. I'm protecting myself. I definitely would not be adding to my position. 1,000% I am confident of that statement. Here's a statement. For whatever reason, if this thing loses 215, it probably loses 200 in the blink of an eye. And then we have to have that same conversation around 196. I'm not trying to scare you. I'm just trying to put some reality. In the meantime, they are buying dips. So if you are a momentum trader, have at it with a flair of gambling over the earnings. Not for me. Arista Network, you saw how quickly we step up to the plate. We went long and we made money right away. It made sense. P&L impeccable. Huge drop. Pretty decent outlook for the overall economy. So no brainer. I forgot why it fell. Was that earnings also? No. Why did it fall like this? Anyway, it was a buy the dip moment as a momentum trade, fairly slow poke. We did that. Now there's no action. It went to the moon. It shouldn't have. It fell into hell. It shouldn't have. Somewhere in the middle lies the truth. There's nothing to do. In fact, what there is to do is you need to see if they are topping off. Look at this massive reaction to earnings from back of November. Last year, right there. Look, that is one candle, that orange box, one candle. And look how we stayed in it and then we broke out from it and now we're topping off at it. I think it's an exit as it approaches 122. What's it going to take for this stock to go above 122 this year? Okay, DeepSeek. Thank you. Yeah, that was deep. Every time I hear it, I laugh. We are that stupid. Collectively. As a world, we are that stupid that one freaking company that provides something called DeepSeek that faked its data from another company who is BS as well, which is the AI that we have now. Anyway, we can have that discussion, and I have a lot to share on that one. Oh my God, this is such a dumb world. Okay, yeah, that's right, DeepSeek. But look how DeepSeek's drop respected the orange box perfectly. Yeah, amazing how that works, right? Okay, so now play the orange box plus or minus a little bit. So I'm going to tell you, above 122, it's a short for Arista Network. It's an exit. If I'm long for a trade, I'm out. If I'm an investor for the long term, there's nothing to do. You own a good company. If you owned it at 100 or 104 or 108, it's okay as long as you have a room to add, say, 2 years in the next 2 years. Here's a statement that I'm going to say. It's kind of useless until it happens. If you lose 98, you're going to go to 86 maybe, with a lot of support in between. And the support will come from the actual P&L. It's bulletproof. So it's an amazing company. Don't ditch it in fear. You can own it with more comfort than Apple. That's my take on it. Air Products here is not an obvious point of entry. from a trading's perspective, I can have a class on it, but if you're itching to go, go. Because if they break out, they go to 354. I'm not that guy. If I'm trading it, I would buy the dip into 328 or lower as a trader. As an investor, I don't know what to tell you. If you own it, you own it. If you have enough shares, sell covered calls, put them to work. Support, 315, give or take. Better support, 302, give or take. Bulletproof support, anything below 295 should be bulletproof here. I don't know anything about this company. What is going on? See, this scares me. Look at the net income, right? The net income, the bottom line, and then suddenly goes from, where is it? 696 to 2 billion. I don't know where study that part. That stuff makes me nervous. Arvinas. What is this? Biopharma. Okay, so charts are not going to help you here, friends. Biopharma, you got to study the company and gamble. You either hit a home run or you've got a pothole on your hand. Charts will not help you. That's an ugly chart, and it's an ugly P&L. But that's not about P&Ls. It's about outlook for a biotech. Not for me. Academy Sports and Outdoors. Wow, that name rolls right off the tongue. So what they're doing is, whatever happened here, you have support inside that long wick, whatever that is. That's insane. That's absolutely insane. Anything below 51 should be support. If you lose 51, you're probably going to 48 to test the bottom at that. Sellers above 57, I would not be long. Yep. We're going to have a fun Monday. Speaking of Mondays. Let's see here. Who is this? AVGO. Excellent company. It looks challenging. See all these green support lines? Because we fell through them, I never updated them. They are now resistance, in fact. And look at that. Look left. It says resistance. They broke through it. Support. I didn't rename it. I renamed it here. So now we can do it as a battle zone, right? So I'm not going to do it there. And this one would be living here. And I will rename this one as, yep, I will put exactly the same spot. Take that out. Support, yes, it's a zone though. Like everything inside of here is a support zone. So we would be better off. Look, they never filled this one. So keep an eye out for a revisiting of 193 at some point. Yeah, there's plenty of support everywhere. It's a zone here, definitely a zone below here, and of course anything here. So we do have support, and we do have a lot of resistance. So why is it going to go this way or that way? We'll have 25 days until the earn. Maybe this one reacts with Alphabet. That's funny. I have a feeling it will move with Alphabet. Let's hope it's up if you're long. Technically, anything above 230 is going to be challenged, and anything below 210 is going to be heavily defended. If the markets have a hiccup and this one loses 195, then we can talk about some pretty good entry opportunities for the long term. So this is a stock that always delivers. It's Taser. And they're pretty much, it's like Boeing. I mean, they don't have real competition. Buy the dip. P&L is okay. Like the sales are okay for sure, but the bottom line isn't. So I wonder why. What kind of financials do they have? They have good gross margins. So by the time they put the stuff for sale, they're good. But then operationally, they blow it all. So this is something maybe they can control. Software and sensors and Taser. Wow. Less than half their business is from Tasers. It's more softwares. A lot of debt comparatively. 720. Let's see, balance sheet. No, they're okay with the debt. Never mind that. Statistically speaking, 23 times sales, that's very expensive. That's twice as expensive as it's been. So maybe you don't touch this. I'm not talking PE, although you should. I'm not talking PE. I'm talking price to sales. This one grows fast, double-digit grower. So price to sales is an appropriate method of measuring how expensive it is relative to itself. What does that mean, price to sales? The speed with which the stock price rose is outpacing the growth in sales. Even though it grows 20, 30% in sales, the stock price is growing at a more rapid pace to the tune of it's double now what it usually is, almost. So maybe here is not an obvious entry point, just from that perspective. Boeing shorted it, and I think it's doing well. I shorted the spike. It was a boring report, and everybody ate it like hotcakes. So I'm short Boeing, and we'll see how that plays out. I'm pretty sure it played out well already. I believe I shorted it, and I shared it using a credit call spread. Is that the stock? And then I sold naked calls in it as well. So I'm pretty sure it's working well. There's nothing to do from an investor's perspective. Anything above 182 is a sell, and you have buyers below through 171 and backup buyers through 165. You don't want to lose 165 because then you will be in the 150s pretty quickly, where you will have better buyers. Let me see, where's that purple squeeze area? There we go. So that's a battle zone from a while back. We've swung low, we swung high, and I think it's okay for it to drift towards 160, and it'll be a pretty good bargain for these days. You can go higher with it, so if you short it and you make money and you want to close it to free up some margins, so be it. You can. Bank of America, I think all banks are overblown. They've never been this expensive in my lifetime. I don't remember banks being that expensive relative to themselves, especially boring ones like this one. So I'm going to say it this way. It's going to take a lot to break out into a new all-time high, and it doesn't take much to bring it back to 44 and 43. If you lose 43, you're going to lose 40 in a series of lower lows and lower highs. So I'm looking for a topping formation just like the market, although I don't have a top. This is very close to the market. You know, we made highs, we made better highs like the S&P, but I'm still looking for a top. Very strong performance from banks. Banks should not be leading the market that is rallying on AI, on tech, and they have been. Last couple of weeks, the banks put in a lot of heavy lifting, so that shouldn't be. That's my personal opinion, so we'll see how that happens. Biogen, everything I said about AbbVie earlier in the video applies here, only this one is an uglier chart. I don't know why it's falling like it's going out of business. Look left, every rally has been sold off, almost systemically, so one would expect that they want to test the 140. If you lose the 140, you're going to 132. And you have sellers above 154. If you overcome that, sellers at 162. That letter R, we have a bunch of them. We have here R, and we have resistance here, and you better not lose that one because that will bring you this. So they're selling rallies. Look at it. It's very clear. Rally sold, rally sold, rally. The question is, will it be sold? Will it result in a lower low? These other two did. You can say that as well here. Wow, that's pretty ugly. Oh my God. All right, so let's zoom out and see where does the pain end. How about 1 week? There's no, it's a bottom spit, to be honest. When the market cannot stop rallying, and this company is back to prices from 2011 and 2012 and 13, you have to ask yourself, what the heck's going on, and why would I want to be involved in it? I mean, the P&L is not that bad. What do they know that I don't? That would be me questioning myself. BKR, Baker Hughes, what is the question? No, that is an exit. That is a short. That is, you got your money back from 2016. Oh, my Lord. Yeah. I don't know what the question is, but for me, this would be a no touch. If you waited 8 years to decide to go long, wait a little bit longer. You might get another entry around, I don't know, 43, maybe even 40 if the market's correct. Not an obvious point of entry would be the easiest way to say it. And OPE, nope. And look at this. I do have a ghost. This from here, I put it from here, and I said maybe we do this, and we did that, except accelerated. So maybe you have a few more bucks, but you waited too long to start. If you're shorting it, okay, just be careful. It's not for me. Berkshire, I am short Berkshire. Again, boring company, excellent company, you know, put together by the best investor of all time, right? Okay. So this, I've done this trade several times this year. Sell a call, buy a put, or sell a call spread, buy a put spread of any sort. So they're selling rallies. This was a rally. Let's see if they sell it. Unfortunately, I think it can fall to 458 and mean nothing. I mean, if you're an investor, this means nothing. I'm just trading the price action. If I'm an investor in this company for the long term, that's amazing. If you're trading it because you think you're going to make money from here to 485, there are better trading stocks, but you have support below 455, better support. You have a weakness in the chart until 448. Well, according to my eyes. Okay, so there's weak spot down to here, support. Okay, so that's my take. There is support at 457, 460, but I like that spot. Where is my text? Trading view. Let's go. Anyway, better support below 440, of course, and even better yet, below 417. So you see what I mean? Wow, that took a long time. Did you see how long it took for the word to show up after me hitting enter? Okay, that's the kind of technical. I don't know what's going on with Windows the last couple of weeks. Very strange things going on. Every line I have and box presents a bunch of support levels. Bulletproof company. My take is that why should it spike? That's why I'm shorting it by selling calls, not buying puts for myself. Blackstone report soon. Where is my reporting numbers? And now suddenly I can't see that. Bummer. Okay, I don't know when it reports. No, it just did. All right, so technically speaking, target 1 has been met. It could go to 166 to meet target 2 of that red W you see on my screen. There is support though halfway. So anything below 172 should be interesting to buyers. I can see them falling to 168 without changing anything. Target 2 is 164. Target 3 is somewhere like 156. Oddly enough, it's that wiggle of the green mark. It's almost exactly that number. Plus there's that line. Look how important that line is. Huge fail, big breakout, confirmation of the buyers. So if they approach 160, give or take $5 to $6, $8, it should be bulletproof below that. So if you're picking for a perfect entry point, this is one of two. Okay, just don't add until you challenge that green. CARR, 9 days. Earnings. It's a decent support zone if I'm looking left from here on to 61. That's a lot of resistance above 72. If you want to take a guess on the earnings reaction, go for it. It's not for me. The last earnings reaction was a disaster. The one before it was also not good. Dip, spike, and deeper dip. And the one before that, up. And the one before that, down. So there you go. Coin flip. 2 up, 2 down. So not for me. Plus, what's with this net income fluctuation? That scares me. If I'm invested in it, I'm fine. You just don't want to lose 64.50. You will end up at 60. CAVA, I would not touch this. I'm reading some rhetoric that there are some people that have issues with it. Look how consistent it is, though. Like if you consider this last dip back here, how it resulted in that, one would say this is the same dip and it's trying to break out. Fundamentally, it's not a bad deal, but you need to make sure that they're not guilty of whatever I read about it. So do your homework. Technically speaking, that is not an entry point because of all of these fails, and then upper fails even higher. So the question, will it take out 152 before it loses 110? I'll put a box. Whoa, Nick, that's like miles away. Yep, but that's the big question. The investors should look. If you lose 110, you're probably going to go to the low 80s fairly quickly. And that white line will come to fruition. The bulls are doing a good job popping here. I don't know what that was, but good job on that. And that's a big problem up here. Let's see what happens at 146. CCJ, very violent stock. Why? I guess the P&L is violent as well. See, this is a chart for traders more so than investors, I think. I mean, it could be a pretty good trading flow. Let me see here. No, I take that back. Long term, it's a great for investors. Meanwhile, you need a strong stomach. So have a plan. If you're an investor, have a plan. Pick levels that it's interesting for you to add, and add on those levels. Let's see if I can help you. Like 42 would be great in this environment. If we crash, 32. Those are easy round numbers because you want to see them lose 36. If we lose 42, that means there's something different in the economy, in the stock market. So then supports will start to break down pretty quickly. I'm giving you big picture numbers for investors. If I'm long as an investor, I'm not inclined to add here. No touchy. If you twist my arm, I'll buy a put for the end of the year and forget about it and sell some put against it. Maybe sell a call against it out to the end of the year. I don't want to deal with it. The investors in this ticker tend to be super... I don't want to label anybody, but people who cruise and people who trade cruising stocks are extreme. So I don't want to fight with them. That's what I don't want to do. This is a breakout in the making for any chart. But there's a chance of it coming back down below 26 in order to do another leg higher. So it looks like it broke out from 27.20, but breakouts usually involve coming back and retesting footing. And you might have an entry point closer to 26 if you're not long already. That's what I'm saying. The CELH, I don't like the P&L. I don't like the drink. I think this was a hoopla. And it's trying to base. I think it needs to come back above 26 if it wants to base. This is a descending wedge, so they tend to pop. If you get a pop and you're an investor and the pop will fix your problems, I would say find a better stock to own for the long term. I don't want you to panic out of it. If you're an investor, you do have support, but it extends through 15, technically. Like, this is a pretty good solid base. And the market has never been higher, and this one is falling down to hell. So it's not a good situation to be in. I would use rallies to reevaluate my position. If I'm long as an investment for the super long term, I shouldn't expect 100 again or 95. I should expect a normal curve back up towards the 40s, but that might take a long time. So if I'm invested, I'm not adding. I'm leaving dry powder for the holy crap moment. Colgate, not a bad long from a perspective of longer swing trades. That is a bad candle last week, though. I would not have... Okay, so if I got long, I would have a stop, or I would only take half of a position, because if you lose this base, you might go down to the low 80s. Support from back here sounds and looks strong, but it's pretty old for me. So it's not very solid. Plus you have this stuff behind it. Better support at 83, even better yet inside this zone right here below 81. So that should give you your stops where you want them. So if I go long here, I should have the stomach to face a dip into 82. If I don't, then maybe this buy the dip is not for me. Chipotle, very interesting going forward. I'm interested in it. Here's the question. So they lost their CEO, their superstar CEO. He went to Starbucks. Are they going to be able to break out from 66? Is it the old Chipotle? It's a slam dunk, yes. Or are they going to retest 49, 48, or even 42? The old with the old Chipotle, it's a slam dunk. I don't know going forward. 2 days earnings reaction. Let's see what it does. If I'm an investor, I'm an investor. I'm not entering a Chipotle trade as an investment before the earnings. If it dips into the low to 50 or a little bit lower, it's a buy the dip opportunity if I'm not long already. Come into the live room the day of the earnings, and we will, before they report, and we will look into the options. Maybe they'll give us a clue. I doubt it, but maybe. Conoco, you know my opinion on oil stocks. Okay, so I only like Exxon, Chevron when they crash. I would buy a bunch and put it in my portfolio. They pay dividends. They worship their dividends. During the pandemic, they cut everything, and they cut 20% of their capex, and they said we have more, twice as much more to cut so we can protect our dividends. It's sacrosanct. So not up here. So this goes to me not wanting to touch Conoco. But if you know the company, you want to invest in it, go right ahead. You have buyers below until 94. If you lose 94, you're going to have a fun ride down to like 87 or 85. So this stuff that happened up here could be happening here, but there's no sign of it. You have support. You have backup support that you don't want to lose. So that is a support zone. That is another support zone. But if you lose that one, whoop, you're going to go down to here. On the other hand, anything from here on up is resistance. Short-term comments. You have earnings in 4 days. If they spike on earnings, I would exit my position. And if they dip, then you would have your entry point. Right here, you're guessing up or down into earnings. So I don't know what that is. We'll skip it. CORQ, I don't know what that is. So we'll go to Costco. I believe Costco was responsible for a lot of upside in an ETF this week. So excellent company, buy the dip company. It's unique. It's not like it's competing with Walmart. I think Walmart, Amazon, and Costco can coexist and dominate, all three of them. The rest are scraps. The scraps are for whatever is left. This is what they're trying to do. And this is just a copy-paste situation. So they're trying to do that on the dip. They started from a lower base, though. So if I were to do this, I would say maybe they're at the tail end of it. Okay, you understand? So they did that, but from a lower base. So that letter R stands. I will keep it there. This here is not a starting point for Costco. If I'm invested in Costco, I am not adding. If I own shares, I'm selling aggressive cover calls against them. If I wanted to own shares, I would be selling puts, although that's a large stock. Not many people can afford to sell a put on $1,000 stock. How about some put spreads to get me long-ish without having to buy anything? And maybe I can marry that with a debit call, a spread diagonal source to get me long that way, so to capture the upside potential. With the market being at all-time highs, this stock is way too expensive relative to its own self. It's a great company. Buy the dip, not here. CrowdStrike, no touchy. Buy the dip, not here. I don't know if you need details. If you ask me to go long or not, definitely not. If you're looking to short it, good luck. Yeah, you can short it. It is shortable. I would use a credit call spread and a debit put spread. In fact, I may join you in it. I would sell a call spread, buy a put spread. Earnings are in 37 days. So I would sell a call spread for like 30 days, not any longer than that. And if I were to buy something, I would buy something to expire after the earnings. Not that I want to stay in it until after the earnings, but this way I could play with time and implied volatility holds up better if the thing I own has the earnings in it. Chevron, I didn't even notice, but they fell apart. So oil spiked late yesterday, Friday. I don't know what's going on with the oil. Maybe we had some rhetoric that is, quote, war-ish. Oh, maybe it's the spat with Canada. So Exxon, Chevron did more than I thought. It went through the resistance like it wasn't there, that green box. And so now we can move that to here. That is now the whole zone is resistance. We've just shown that it is right there. I would exit rallies into 157 and 161. And I would have support. There is support. If you want a line, that will be a decent support line. It's this one. And you don't want to lose that one, this one, the red line. Red is for, you know, this is easy. This is important. Should be easy, but it's important. You lose that, you're going to test the 133 zone. I believe it's not trading like Exxon. They used to trade almost exactly the same. Delta Airlines, all airlines are short up here. Airlines are a mess. There's so much scam going on in there. Apparently, I didn't know that, but they pay people, like if a flight attendant or the person at the gate forces you to check your bag, they get $10 per bag or some weird stuff like that. What is going on with this company, these companies? And they still have a P&L that's so sad. I mean, they charge for air. I fly once a month, and my flights have more than doubled in less than a year. Same routes, same class, same everything, more than doubled. It's crazy. But now 2 flights, they haven't been sold out. I don't know if it's a trend or a coincidence, one of which had delays from weather in one part of the world, one part of the US. Anyway, definitely not in the starting of investment. If somebody's shorting them, that's fine with me. As far as value, there's no value. I mean, I would need I don't know, 40% drop for me to consider it a value. That is true statement there, Echo. Nobody hates their customers like the airlines, or at least the people. Every time I walk up to a counter, every once in a while you get a pleasant person. Most people, you walk up to them, you can see it on their face. Ugh, I can't believe there's a person in front of me asking me a question. Like this one, I'll pause it. Okay, we had a discussion. I feel better about it. This is not an obvious entry point. I think that a path like this could happen. So if I were to guess, if you're optimistic, this is what you want. You want them to dip so they can make another rally. Oops, that didn't happen. But anyway, you get my point. Drift a little bit lower to come back up. There is support. I think there might be some weak spots in the chart down here. If I were to put some weak spots that need to be covered. And pretty decent support at 65, but you want to hold it. Pretty decent support at 63 or 64. You want to hold it. If you don't, I think you go towards the 61. Deere, too high. Good company, not great. Look at the P&L heading south on a quarterly basis. On a yearly basis is okay. Keep your eye on it. So from an investment perspective, there's no way in hell you would convince me to go along here. In fact, it's shortable. When does it report? 11 days. Darn it. You know what? I'm going to put it on my radar. If it's cheap to buy a put for the earnings, I'm just going to buy a lottery ticket. I've no doubt it's a great company. Check it out, okay? So this is 5 years worth of Deere. You would think it's NVIDIA. You'd look at the P&L, declining sales for 5 years. Look at the bottom right-hand corner of my screen. No, I did. Thank you. Looking out for me. This makes no sense. This is what they call divergence. Yeah, not from the chart. Logic divergence. The stock up and away. The actual revenues and earnings down and away. Here's a statement that's going to blow people's mind. In the next few years, this stock could be a disaster. I'm not going to say the numbers because they're going to hate me for it. That's the one statement. The other statement is this chart just started to break out. So balance the two. This is why I say lottery ticket. Like if I wanted to risk $200 and throw it away and buy one put and get it out of my system, that's what I mean by lottery ticket. If $200 doesn't make me cry, that's the only thing I would do. This technically is a breakout with $150 of upside from here. from 150. So 600 is doable with this one on a breakout. This is a weekly chart, slow moving thing, right? But you look at it logically. Look, there's no volume here. There's no trades inside here. Pretty weird. This is going to be a study in charts. It's shortable with a stop for sure. Decker. Oh my. So I said, somebody asked me, was it last week or this week? Somebody asked me for Decker, and I did these, and look at that in one candle. But that's a reaction to earnings. So this is where the bulls will not have good footing until they hit 164. Oh, I remember. So I said, shortable from here, if not from here, from here. Man, this is like that Caterpillar we did once. We shorted Caterpillar on that premise. I said, you can short it here, or you can let it spike and short it there. Wow. Either way, you made money if you took my comments. I don't think it has solid footing until it hits 165 or lower. Better footing below 150. It should have a lot of buyers. Okay, look at that. Buyer, 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 buyer. And but then you have, it's a ugly chart. There's no good base. That's why rallies like this, when the P&L is this jagged, make no sense. So on a yearly basis, you'd see up, up, and away. But then you look at the quarters and it's all over the map. Not a bad company, just a bad chart. Dollar General, I wouldn't touch this as an investor. None. So P&L solid, falling off a cliff like it's going out of business. I wouldn't touch this thing. These are prices from 2017. If you're an investor and you're still in it, okay. If you're looking to invest, don't you think you have better tickers than this? I mean, why are you scraping the bottom of the barrel if you're looking to invest? Okay, yeah, it could spike, but that's trading. Investing for the long term, markets at all-time highs. This is at 2017 lows. Not my pick. I don't know DOMO. What the fudge is this? Yeah, I'm out. What is this? Develops and markets executive management software solutions. Okay, so this is like Palantir. Yeah, I don't know what that is. No, DOMO. Not an obvious entry point. What is this? Oh my God. What is happening? Okay, so anything above 860, no touch. Anything below 660 should be bulletproof. I'm moving on. Edison International. What are you guys doing? What are these? Is this an electric company? Renewable energy. Oh yeah, that's here. Yeah. Are they the fire people? Are they responsible for the fire? I wouldn't touch it. To be honest. I mean, this is a support zone. If I'm long, I'm not getting out, but I don't know anything about it. The chart is not going to help you except to say these are level they bounced at from 2022. That was the bottom of the correction after the pandemic spike. This is pandemic written all over it. So if you're an investor and you're still in it and you haven't gotten out, okay, I get it. But if you're looking to invest again, aren't there better stocks than this? I don't know. It's not for me. ELF. So yeah, I hated it up there. I don't hate it down here, but I don't love it either. Earnings in 4 days. Here's this thing. This looks like a giant head and shoulders that points to $10. Okay, so clearly that would be a disaster not happening. But it should tell you, okay, maybe I should not jump all in. This is an area that they bounced recently and not so recently. 2023, they bottomed here. So if it falls into the blue box from earnings, maybe it becomes interesting. But this stock was so crazy that there's no base. I'll show you. Remember when I had beef with ANF? Well, this is one of those ANF type of rallies. And you look at the P&L, ANF did not look like this. This P&L is worthy of a sharp spike. This is 5 years. But now recently, it's no longer like this. So you have to see what they deliver. Have they started to taper down, or are they continuing this promise? That's the question. Solid base, Short term, around 90 and 85, it's doable to go long. But then you look left, this rally was pretty crazy. Good starting point if it drops on earnings. If it rallies, I think there's a lot of sellers at 148. And that's what you want to see. Are they selling rallies inside this resistance? And are they looking to hold or lose this one? Anything below this blue box will be pretty good entry price. EOG, flat as a pancake. Heavy sellers at 138, heavy buyers below 118. Ping pong, look, flat. See? Chart matches P&L. There's no divergence. Flat, flat, flat in a good way. That's a pretty solid income statement. Breakout from 140, you should get to 156, but why would it do that? Right? Lose 118, you have backup 108, even stronger buyers. Lose 108, you have stronger buyers around 100. So it's I bet you options will have no premiums in that thing. Ethereum. Are you trading or investing? I own Ethereum. I traded the lows. I exited a lot at the top. I'm holding a core position, and I'm not trading that core position. I am watching it to gauge if crypto is going higher or not, because this one should be leading. And this is a huge pivot zone. I want to see what it does around it. I think there's a chance it goes to 2,500. But that's on a different time frame. Clues from a different time frame. Targets 1 and 2 have been wet on the downside from here to here on this red W. Target 3 would bring you a test of these wicks from January earlier. So 29.75 and 25 are buying zones. You might get tested this week. If you lose them, you probably head towards the 2,500. Sellers at 35, into 35, 33 to 35. You take out 35, you can get to 38. ETN, I believe they reported, right? Yes. All right, so now you want to watch for, is 350 and 360 resistance? Like to the point where we are going to drift to 275? That is the question. You want to see if this zone, which is a fair value gap of sorts on the time frame, is it a sell zone? And they do have support scattered everywhere. We'll change it to green and we'll say support in big letters, because it is. If I'm long, I'm not scared. If I'm looking to get long, I would leave some dry powder in case we want to dip into this box. Etsy. I'm not so excited about it anymore. The P&L is not as exciting as before. The concept, although good, is still not as exciting as before. The pandemic was like the perfect time for Etsy, right? Everybody's out of work. They want to sell stuff they make at home. All right, so what I'm concerned is that this squiggly red is what's going on here. Watch. They're fighting over a level where they've had sellers above. They're fighting over a level where they've had sellers above. And they're trying to hold the floor. And at the time, they were trying to hold the floor. So they have support from 50 to 47. You don't want to lose 47. And unfortunately, there's an area that has not been fulfilled from before. So if you want to hold 47, you can find yourself in the low 40s. It's not a bad company to have for the long term, but why is it not trading as exciting as the other ones? So just that question would have me not add to my risk. That's a bad trend. And the levels from 2020 are below here, but it's like all over the map. So starting points for the long-term investment, solid. All in, not so much. When will I add? Nowhere near in time. I would invest in it. I would be long. I would sell puts to own shares with confidence instead of buying shares. I would sell puts to buy a call spread. All of these I can do if I'm an investor. I do warn you though, there are 18 days from now they report earnings, and I have no idea how they react to that. It's okay to be long into earnings, but not more than half the position you want to own as an investor. Fortinet, not an obvious point of entry. Good solid P&L and an earnings reaction in 4 days coming. I don't know how will they react. The last one was a massive rally. So was the one before it. The one before that was a drop. The one before it was a pop and drop. And the one before that was a drop. So you see it's 50-50. And the one before that was a disaster drop. So it's definitely 50-50, a little bit more like 60-40 drops than rallies. Okay, so not a long. It's a buy the dip moment where anything below 84 technically would make sense at 84 or lower. If it falls into the 60s, awesome. It has a lot of unsettled open gaps from here on up. It even has an open gap here. So these are not, I'm not talking about this gap. I'm going to put it here this way. Not area of resistance. This will be a fair value gap of sorts. Actually a little bit wider than this, but I'm just going to put it that way so that you know I'm not putting this whole, I'm not talking about this gap. I'm talking about something else. There's support everywhere. Solid P&L has support from charts and from the fundamentals. GE, there's no support anywhere. Crappy fundamental compared to what it was. This is another, for me, conundrum. How can somebody have a P&L going down as hard as it is and then stock soaring to high heaven? Someone explained to me how they justified losing 40% of their sales and nobody cares. I may be missing a piece of the puzzle, but somebody verbalized that to me. I would short this. If I wasn't short, I would short it. If I'm long, I'm out. Even as an investor, I'm out. I am confident that I may get an entry point that is miles away from here if I'm just patient, just 6 months. If 6 months is too long for you to wait when you're a long-term investor, I would push you to reevaluate your skills. If you're in it for the long term, you can wait 6 months and get twice as many shares as you would have now. Is it going to go to 100? Probably not. But is it going to fall 20, 30, 40%? 40% is a stretch. 20, 25 is easy. I can justify it. This stock is too high. That's the easiest way to say it. This stock is way too high. Let's see. Is that an all-time high? Probably not. No. There you go. We're back to a 2008 and a dot-com bubble. Need I say more? Yeah. You think if I'm stuck in GE from 2008, I'm not exiting here? I am. GLD, all-time highs. I don't know what you're asking for. Don't short it. It's gold. Don't go long it all in. So gold and crypto work the same way. They are rare and getting harder to get, so they should only go up over time, right? If you go now and you go 30 years from now, gold will be higher. Crypto will be higher. So you just buy it if you're an investor at increments. Like every month I do this, or every crash I do that. This here is not an obvious starting point. If you're a breakout trader, okay, you want to trade the breakout, I would buy the next dip in order to trade the breakout. Anything closer to 248 or lower would be a trend, maintaining the trend. This is an insane breakout. I remember times when everybody was talking like this, and then that was 2011, and then it corrected for 8 years, right there. So 2011, it took it 3,200 days to come back from that correction. That's how gold investors work. They go extreme, ballistic, and then they hate it for years. So just make sure you don't get caught in one of those cycles. And this is Barrick Gold. So let's switch to Barrick Gold. So we saw Agnico earlier. Agnico was at all-time highs. Why is Barrick not? From that perspective, I wouldn't touch it. better dealer than Agnico, but if Agnico falls, this one's going to fall too. So this one is closer to 0, so that makes me feel better. Closer to support, that also makes me feel better. If I own it, I'm not doing anything. For anything below 15 is a solid base looking back to 2023. So I would be comfortably selling puts to own shares into 14.50 to 13. As long as I can break even at 13 by being assigned, or 13-ish, I should be selling puts to create income with confidence. And the ultimate goal is to own those shares and break even at 13. So I would be okay with that. Holding calls would be, I would rather hold shares than calls. If I sell a put and I use the money to buy a call, you're long for free. With that, we conclude the first video of 3.